All right. Jayesh Bhai, the question that I wanted to ask you was with regard to the average, your FPI buyer in the market at this point in time. I mean, so far they've been used to working within a very strict cap, and that cap continues. But it has never really hit the upper end of that. What exactly will this new inflow of funds and thereby investors? What would they be expecting coming into India now?
So I just add the caps were getting filled earlier. There are times so the limits were getting filled. So that was the situation at some point of time. But you see, FPI has been always there, right? So it's a question of the which kind of foreign portfolio, right? So it's like typically earlier it was more like banks own offshore FPI or hedge funds, and they are the kind of people who are coming in. Not really, and maybe some sovereign fund but not really across the board long only guys. That was not really we are seeing much of the presence in India. I think with index inclusion, that has changed, right? And that's where with such a large weight you can't ignore, right? So that's really has changed. So from that perspective, and again, as Arvind explained it very well, right? So we're not gonna let the rupee appreciate very quickly so much. So whatever flows comes, RBI is gonna absorb that. The money. So normally, RBI's balance sheet, they buy either INR bond or they buy dollar bonds. If there's a lot of dollar inflows, they buy dollar bonds. So from that perspective, it is kind of replacement we will see. But yes, it opens a new old door. And it is not, as I was telling you, it's like, once you are part of index, it is just not only the people tracking the index. Just to give you a layman's example, right? So if you are somewhere abroad and you wanted to buy something in India on equity side, you would prefer to buy something which is in the index, right? Rather than going to buy a straight mid cap or some unknown thing, even if it gives you whatever kind of returns, right? So from that perspective, if you are new and you are far away, so I think index kind of gives you all global investors who are tracking it to follow that. And also people who are not tracking that, they are also not going to, because, with this kind of weightage on the bond side per se, they may not ignore that. So yes, we will see even more flows apart from the index tracker. Of course, arbitrageurs and hedge funds will keep on coming and going depending on the opportunity. But that's okay. That's a part of normal situation. Yes, as we were talking earlier, that global volatility will impact. But you see, good time, bad time. The core index, guys, is good. So normally, we always used to pitch like, plus minus 2%. You will go on the weight when you're bearish or bullish. But it's not really only 4% delta. When there is bullish scenario, it's not only the index tracker. There are other foreigners who would actually invest in India, and that could actually go to 20-22%. And when the weightage could actually go up from, so it's not just 8 and 12 delta on the index with your 10% weightage. So that's where that can create some volatility. But I think at least the macros are great for us right now. I don't see that kind of happening for at least
Yeah.
next 4 or 5 years, right? So from that perspective, we need not worry at this juncture.